All right, everybody, welcome to Talkin Investing. Today we have a special guest. We have Jason here, who is the CEO of RIOT Platforms now. So we're going to go through some question and answering. So first, Jason, if I can just turn it over to you for a minute and kind of let you introduce yourself. You have been on the channel before, so I wanted to thank you for coming back on the channel. A lot's happened since then, so I'm going to turn it over to you for a minute, and then we'll get to some questions.
Yeah, thank you, Tom. Hi, everyone. My name is Jason Less, CEO of RIOT Platforms. I've been with RIOT since its beginning, first on the advisory board when RIOT became a company in 2017. I became CEO a little more than 2.5 years ago. RIOT is obviously a Bitcoin-focused company, a Bitcoin mining company, and we own and operate the largest single site in North America. We have an engineering division to our company, and we are focused on simply mining as much Bitcoin as possible for the lowest possible cost that we can.
All right, thank you. That's a good introduction. So with that, I'll say that since the last time we talked, obviously you guys put out a monthly update every single month. So, most recently you did your July update. In addition to that, we just got your quarterly report. So, I went through and read that, and obviously you guys do your press conference and all that. On top of that, you've put out some big press releases regarding growth. So there's a lot of information to go through, but I think the most important thing to start with, if I can, I just want to talk about the press release that you put out regarding growth. There's kind of two pieces to that. So if we could just start with the first piece, you're looking to buy a bunch of machines. Let me just say it that way, and then maybe you can give us some of the specifics on what's going on.
Sure. So RIOT built, owns, and operates a Bitcoin mining facility out in Rockdale that has 700 megawatts in total capacity, and that's been our flagship. Well, all of our mining operations have been there. A little over a year ago, we announced we were building a new site, also in Texas, about 2 hours away, in a city called Corsicana. And that site will be 1 gigawatt when completed, and the first phase we've been initiated on is 400 megawatts, so 4 buildings of Bitcoin mining infrastructure. And for a long time, people have been asking us, how are you going to fill this capacity? When are you going to buy miners, etc.? I always told them, trust me, don't worry, we're working on it. Tom, we might have even talked about that last time I was on the podcast.
Yes.
And what we were doing in the background was testing lots of equipment, making decisions about how the infrastructure was going to come together, and trying to determine the best long-term solution for the company. And we found that with MicroBT. Historically, we purchased all of our hardware, all of our miners from Bitmain. Bitmain has a large chunk of the Bitcoin mining ASIC market, and MicroBT is probably number 2 in there. So MicroBT, it was really interesting to us for a number of reasons. First, we are focused on building immersion cooling infrastructure at our Corsicana facility. MicroBT makes a miner that is designed specifically for immersion. That's a big advantage for us. That eliminates a lot of extra work you have to do from the operations side. It's a miner designed for the infrastructure it's going into. We also were very interested in MicroBT manufacturing these machines in the United States. Reduces a lot of logistics risk and helps drive decentralization of Bitcoin and helps diversify that supply chain quite a bit. And then finally, MicroBT was able to produce in the quantity that we needed and was making is making amongst the most efficient hardware out there in the market. As we approach the halving, that efficiency is very important. So what we did was we entered into a long-term purchase agreement with MicroBT. The first part of that purchase agreement was for 33,000, I believe 280 miners to add 7.6 exahash in the first 200 megawatts that we're building out in Corsicana. We also entered, as a part of that agreement, have an option to purchase another approximately 66,000 miners of the M56S++, which is their most efficient equipment. And we had the option to purchase that at the same price, similar terms as that original agreement. So what we essentially did there was enter into an agreement that gave us 600 megawatts of enough hash rate miners to fill the first 600 megawatts that we're building out there. We purchased the first 7.6, and now we have an option to purchase an additional, over 15 additional exahash as a part of that long-term purchase agreement.
Yes, that was a lot of information. If I can dissect it just a little bit into chunks, the one of the things that jumped right out at me as I read that release, and even as I just listened to you, is there's a little bit of, I'm going to call it new math. It used to be, if you bought 10,000 machines, that was 1 exahash. So, we're seeing the evolution of these machines. Not only are these machines much bigger per machine, but if you look at their efficiency rate, I think the M56S++, which I think is the majority of even the first batch of 33,000 that you're purchasing. I don't think it's 100%, but it's a majority. Those are at, I believe, 22 joules per terahash, which, that's extremely competitive. If it's not the best, it's certainly, that's where the next kind of evolution of efficiency is going to, I think. Does that sound right? I mean, how does that compare to your existing efficiency? 22 joules per terahash, I know, is much, much lower than the overall Bitcoin network, the complete network.
Right. So right now, Riot's miner fleet that's deployed at Rockdale, we have a little over 100,000 miners, all S19 series miners. About 1/3 of those are S19 XPs. So you have S19 XPs that are around 21 joules per terahash, and then you have the S19J Pro, all of those smattering of similar machines that operate at around 30 joules per terahash or less, depending on how you're configuring them. So our blended efficiency right now is somewhere around 27 joules per terahash, I believe, at our Rockdale facility. So adding more 22 joule per terahash hardware to our overall fleet is going to lower our overall fleet average efficiency. So this is about being efficient. This is about staying ahead of the technology curve. This is all about being the lowest cost producer of Bitcoin that we can, because we want to use as little energy as possible, therefore pay as little direct cost to generate hashes to generate Bitcoin.
And if I just do the math, it's a significant, I think it's 7.6 exahash for this first commitment, which is the 33,000 machines. So that's more than a 50% increase in your overall exahash, I believe. And that includes getting back up to the 12.5 exahash. So, and then, past that, you have, I think, another 15 exahash, if I'm remembering correctly, all in if you were to exercise everything. And later I'm going to ask you a little bit more about that, because there's some time frames for that. I think this would get you to 35 exahash. So, it seems like with all those new machines, that would really be bringing down that cost, joule per exahash average for you in a big, big way.
Yeah, I mean, this is a real monumental order. And as you pointed out, Riot already has, or shortly have, one of the largest hash rates. We have 10.7 exahash deployed right now in hash rate capacity. That's one of the largest fleets out there. And it's about to increase to 12.5 exahash. So already having one of the biggest fleets, and we entered into an agreement here to increase that by, I think, approximately 60% when deployed at the first part of 2024. And that's just for the first portion of the agreement. With the option, if fully exercised and fully deployed, would take our overall hash rate capacity to 35 exahash. So that would mean our entire Rockdale facility and then another 600 megawatts at Corsicana deployed with this equipment would have a total of 35 exahash between the two sites. So that's a massive amount of hash rate. And for the option part, we can, once again, that's at similar terms to this first part of the agreement. So that price ceiling is locked in. We can have lower prices still, but that ceiling is locked in. So if the price of hash rate went up between now and when we exercise that, we would have the advantage of having that lower price locked in, which historically has proven to be a very good price. And we can exercise this option in whole or in part through the end of 2024.
Okay, so that's an important part. You've got, still well over a year, not quite a year and a half, to exercise the second portion of that, which would be another 15 exahash. So if you were to do that, a couple of questions. You've got your facility at Rockdale, you've got the new facility at Corsicana, which is even larger. So those are two of, if not the two largest, they're two of the largest Bitcoin mining facilities, I think, anywhere. With those two facilities, can you get to the 35 exahash, or are you going to need to build infrastructure even beyond that if you were to, fully exercise everything to get yourselves up to the 35 exahash?
Yeah, those facilities would accommodate it. So the Rockdale facility is capped out right now. The Corsicana facility, we are building, that site has a capacity of 1 gigawatts. We're building, 1 gigawatt. We are building the first 400 megawatts right now. To get to that full 35 exahash, we would just have to build another 200 megawatts at Corsicana. But I would note, we already have the interconnection approved. We already have the ERCOT Large Flexible Load Task Force approval for this 1 gigawatt. It's just a matter of building it. If you've seen the pictures from the site, we are laying out the site designed to reach 1 gigawatt. The first phase may just have 4 buildings in it, but we are building out this site with the intention of having 1 gigawatt in there long term. So our existing facilities would accommodate the infrastructure to get to the 35 exahash. And in fact, we would have another 400 megawatts of capacity even after doing that.
So that's impressive. You could go even above and beyond. We don't know what the future holds, but you're talking about potentially that decision has to be made by December 31st, 2024. Obviously, that doesn't mean that you will have to, have the outlay of all the money and all the infrastructure done. I imagine that's 2025 stuff. Is that 2025 and 2026 type stuff? I mean, how far out are we going? You've got the 400, I know, which is phase 1 of Corsicana, which I'm going to ask you a question about in a minute. And then it sounds like you don't have to do too much more, maybe 200 more megawatts to accommodate everything you just talked about.
Yeah, so that first 400 megawatts is going to be completed next year in 2024. The additional 200 megawatts, if we wanted to exercise that final 7.6 exahash and get 235 exahash, we don't have plans established to build that extra 200 megawatts right now. So I couldn't give you a timeline of that right now. But obviously, that's something we're thinking about and something we're going to be working towards in order to maximize that option that we have there.
Okay, but it would be fair to say, I think just even from reading the press release, the 7.6, which is going to get you to something like 20 or 21 exahash, that is scheduled for the first half of 2024.
That's correct. Yeah.
So sometime plus or minus the halving, it sounds like.
That's correct. The first 7.6 exahash would be deployed in the first half of 2024. And then we could exercise another 7.6 exahash of that option and deploy that in the third and fourth buildings that are also being built out through 2024 as well. Although we haven't made that decision yet. That's just the options that are out there for us, which is a big part of what our strategy is as a company. By having this vertically integrated strategy, we create optionality for each other. We're not backed into other people's options. We create our own options for ourselves, and we can mobilize and execute on these with relatively good speed and efficiency when we're ready to.
So in some of those decisions, that optionality that you have, I imagine, will be dictated by external events, price of Bitcoin, those types of things, as to whether or not and as to how much more you want to grow. Is that the thought process?
Yeah, I mean, we're always looking to scale and grow our business. That's part of being a Bitcoin miner, especially if you want to be an industry leading Bitcoin mining company. So we are always looking to bring capital in, whether it be through equity financing, debt financing options are not amazing right now, or potentially find other types of external capital to bring in. We are looking to bring capital into the business to increase our hash rate. I think that's something that we have demonstrated very successfully long term. We've raised capital and we deployed that directly into growing our business in the form of hash rate. So always productive uses of the cash that we're bringing in.
Right. I'm glad you bring that up. That leads me to a couple of questions, because this seems to be an ultra sensitive topic among I don't know if it's all of your shareholders. I will tell you from my perspective, as you know, my channel covers the Bitcoin miners quite a bit. One of the biggest pushbacks I get is on, funding, stock dilution, and if for those of you who, familiar with my channel, that I talk a lot about, as long as what the shares, if there's stock dilution, is it accretive? And, I hate to almost, that sounds like a buzzword now, but it's the reality. Like, what are they doing with the money? There's good dilution and there's bad dilution. It seems to me like, as you guys are saying, what you've done is continue to grow infrastructure. You're very vertically integrated. So that leads me, I want to ask you, just to get to this next phase, to get to the 20 or 21 exahash, you've got a bunch of things. You've got, I think, $160 million worth of machines you have to buy. You have to do some infrastructure, to get to the first 400 megawatts or phase one of Corsicana. Also, I saw that you have a commitment to buy a bunch of immersion cooling equipment. So can you talk a little bit about the funding for that? Where do you stand on the funding for that? And, is that going to require dilution, or are you going to get to the dilution phases to get beyond that?
So our current expansion is funded with our balance sheet and what we, conservatively forecast we're going to be able to make from selling monthly production of Bitcoin going forward. The total budget for building out the first phase of Corsicana, which includes both the first 400 megawatts of buildings, but also all of the site-wide infrastructure to accommodate an eventual 1 gigawatt. That total budget is $333 million. We've spent about $102 million of that through Q2, which means we have a remaining, about $230 million to spend on that infrastructure. And that first part of our purchase agreement with MicroBT is around $170 million. So we ended Q2 with $289 million in cash on our balance sheet. So very strong balance sheet position as is. We are a strong producer of Bitcoin as is. We are bringing in cash on a monthly basis by selling most of our Bitcoin production for cash and bringing that in. So this first phase of this development, we've already funded with our balance sheet, with our operations.
Okay. So I think that's important for investors to understand. This upcoming increase in exahash is funded. And I wanted to bring up, you talked about your balance sheet. You guys have, in my words, I'm not going to put words in your mouth, you have a rock solid balance sheet. You probably have, in my opinion, the strongest balance sheet out of all of the publicly traded Bitcoin miners. I think that just proves out mathematically. I will say, just looking at all the Bitcoin miners, and the equity that you have, the book value that you have is actually more than double the second closest Bitcoin miner. So, that goes to, like you talked about, and it's not in a lot of intangible assets. You have a massive pile of cash. I think it was $289 million you mentioned at June 30th. I'm not sure where that sits now.
And 7,200 Bitcoin on top of that.
So perfect. That's exactly where I was going next. You have one of the largest stacks of Bitcoin. So what's your Bitcoin strategy? You have a very nice hodl position. You're really only one of 3 companies left that has a significant hodl. How do you plan on handling or balancing that going forward? Are you going to eat into that if necessary, or would you rather fund through dilution? Are you looking to add to that hodl position? What's the thought process on hodl?
So we are first and foremost a Bitcoin company. And when the company narrowed in on its strategy of Bitcoin and Bitcoin mining in late 2019, the reason was we're long-term believers in Bitcoin. We want exposure to that future. I don't think any of us know exactly what that future is going to look like right now. Of course, we believe Bitcoin is going to be worth more. We believe it is this superior form of money and store of value. How that whole ecosystem comes together in the future, I think is still hard of anyone's guess. If you were operating the internet in the mid to late 90s, would you guess the internet looked like it did today with all the different applications and sites that exist? No. Who could foresee those details? All we know is that Bitcoin is transformative. It's important. It's the future, and we want a piece of that future. And that's what ultimately drives our strategy of holding Bitcoin on our balance sheet. Of course, by Bitcoin appreciating, that improves the position of our balance sheet, improves the value of that Bitcoin. Could we sell that in the future to do something? We could, but that's not our preference. Our preference is to hold on to that Bitcoin and make small additions to it going forward as we produce every month. If you look at our monthly updates, we typically sell most of our monthly production, but not all, not more than what we produce in a month. So little by little, we're adding to that over time. And that's what's gotten us to that 7,265 Bitcoin that we have today as of the end of Q2. So I think to answer your question, Tom, of whether we would sell Bitcoin or issue equity for growth, it really the favorite answer. It depends. It depends on the market at that time. It depends on our cost of capital at that time, which is impacted for a lot of things. Historically, we have found that it makes more sense to issue additional equity, issue additional shares to fund growth instead of selling that Bitcoin balance sheet. Selling that Bitcoin out of our balance sheet. And I think that's likely the decision that we're going to continue to make.
Okay, and as you know, everybody's free to look at your financial statements. Obviously, they're a matter of public record. You have continued to do some dilution, but it's pretty conservative in from my viewpoint versus what some of the other companies have done. And obviously, every company is in a different position based on when they came in and all the other things that happened to them. But you guys have not, had a massive amount of dilution. So the other thing you mentioned, there's typically for a lot of companies, for most companies in most industries, there's a third piece of this puzzle, which would be debt. But my perspective, and I think you kind of touched on this a little bit, I'm just not sure that debt, there's any structured debt out there that's going to work for Bitcoin miners in the near term anyway, or the foreseeable future. So is that off the table, or is that something at least you guys have somebody taking a peek at to see if that environment changes?
So first, to the last part of your question is, we have a very strong team, and we're looking at different financing options all the time. You don't know what's there unless you're looking at it, evaluating it closely. So we have a team of people that are looking at different options all the time. As you said, though, Tom, the industry is immature. These products have not matured to make sense for Bitcoin miners yet. We saw what happened in 2022. Debt, that seemed like a good idea to many miners when they took it on, then became crippling when the market took a bad turn. You have to have a lot of staying power and flexibility as a Bitcoin miner. This industry is volatile enough as it is. If you have that extra constraint of having to make debt service payments or have various different types of covenants that you have to meet, that really constrains your ability to operate as a Bitcoin miner. And then constrains your ability to reach that long term. It all comes back to that long term vision of Bitcoin for us. We believe Bitcoin is going somewhere, but we have to make it there. And I think that's what drives the fortress balance sheet strategy that Riot has deployed here. We focused on keeping a heavy amount of cash in Bitcoin that allows us to withstand the volatility in the market, withstand the downturns in the market, and be opportunistic during those downturns to have the capital already there. And by having no long-term debt, we eliminate those constraints as well. And I think that also ties into your comment you made about Riot not being too heavy on the dilution through this year. When you have this stronger balance sheet, there isn't an urgency to catch up to do things. So when we enter into this large order with MicroBT, we don't have to suddenly, if we were going to enter into a new order with MicroBT, I should say, we don't have to suddenly raise another $170 million immediately to meet that. We have a balance sheet that helps, kind of get us there. That allows us to pick the right spots, the best spots to issue equity, and do it more incrementally over time instead of having to push the gas so much at one time. So we view this strong balance sheet as really important. Things happen, the market takes turns for worse, opportunities present itself, and you need cash there to act quick. And that's been an important part of Riot's success, going back several years now, going through a previous halving and all of that. It's having this cash on our balance sheet.
Right, and you guys have managed from a long-term debt standpoint to basically stay at zero, I believe, pretty much throughout. I think you're at zero right now. Obviously, that doesn't mean you don't have any liabilities, but
Riot has no long-term debt. our electrical engineering and manufacturing subsidiary has a very small line of credit. So, okay, that's technically debt, but it's very small relative to the overall balance sheet of Riot.
Okay, that's fair enough. Thanks for mentioning that. Well, that leads me to a couple other areas. So I'll start with the engineering piece. How does that fit into your overall strategy? Is that part of being vertically integrated? Do you guys use those engineering services yourself? And, who are your customers outside of whatever you may use internally? Is it other competitors of Bitcoin mining facilities? Is it high performance computing centers? Is it all of the above? Is it more? And then what's the long term strategy? I know that you're a Bitcoin miner first, but it seems like this is a piece of your vertical integration. But I don't want to put words in your mouth. What's your thoughts on the engineering piece of this puzzle?
Sure. So for background, our electrical engineering manufacturing division is a company called ESS Metron. ESS Metron's been around for decades, and they were a key partner to Whinstone before Riot acquired Whinstone in 2021 in building out that facility. They helped engineer the specific electrical infrastructure that was needed for Bitcoin mining at that application, and they were the key supplier. So at the end of 2021, Riot, in pursuit of its vertically integrated strategy, acquired ESS Metron. This accomplished a number of key things. One, we're reducing our cost of infrastructure. Bitcoin miners build a lot of electrical infrastructure, especially building the biggest sites, known globally. We use a lot of electrical equipment, and we need equipment designed specifically for our application. So by having ESS Metron integrated as Riot's own electrical engineering and manufacturing division, one, we're reducing our cost of building. We're getting equipment at cost. There's no fee that they've pocketed. At the end of the day, it goes into the same and it's netted out to the end of the same balance sheet, the same financials, I should say. So we are effectively then turning cost into revenues, because not only are we reducing our own cost of production, but we're getting the benefit of their other customers as well. Riot is a small part of ESS Metron's overall customer base. They do serve some other Bitcoin miners in a smaller capacity, but generally their largest customer base is data centers, high performance compute data centers, etc. The customer list is, of course, confidential, but that is where they were seeing a ton of growth and a ton of demand right now in that data center segment. The other thing I'll touch on, well, I've already mentioned, is having that engineering talent. So when we're looking to build something new, we have our own internal engineers that are looking at the problem and designing a solution. So when we're doing something like, building a new deployment of immersion, like what we're doing at Corsicana, that requires different approaches to electrical infrastructure than we've done in the past, we have a team right there that is generating that solution and helping ensure we get it on time. That supply chain visibility is really critical as well. It's not just about the cost, but it's getting access to these materials and having the visibility of what that looks like and when it's coming in, and having the advantage of being a priority customer there. As this AI HPC data center industry continues to explode, a lot of this electrical equipment is incredibly high demand. It's very short supply and it's very difficult to get. And I think over recent years, people have talked about that and thought about that from the big transformer perspective. They hear that these big high voltage transformers have 2-3 year lead times, which is the case. But a lot of the smaller equipment, the breakers, the conduit, this stuff is very difficult to procure as well in a very large scale. So having that talent internally to be tapped into that supply chain, serving Riot, not just serving another customer, has been really key to de-risking our growth and making sure we're able to execute at speed and on time for growth.
So I hear a lot of supply chain talk. It sounds like, the engineering is a part of your supply chain. I don't want to say the switch, but the addition to MicroBT as a supplier. I think their stuff, they've got a plant in Pennsylvania.
Just toured it a couple weeks ago. It was amazing to see. You hear about this ASIC manufacturing is always this Asia thing. And then
Right.
we're out in Pennsylvania and we're touring our factory hands-on, seeing these ASICs come together. And it was so educational, so awesome to see. It made me really excited about the growth prospects of Bitcoin mining in North America.
Yeah, that is exciting. And like you said, that's been an Asia piece of the puzzle all the way along. And we all just kind of lived globally the nightmare of supply chain breaking down in a lot of different ways, across the board. So it makes sense you guys are focusing on bringing some of this back in. Your immersion cooling equipment, is that something that's from a supply chain standpoint? I see you have an agreement to buy, I think it was 200 megawatts worth with an option for another 400 megawatts worth of immersion cooling. Are you guys basically, I think Corsicana, the first 400 megawatts is going to be all immersion cooling. Is that correct?
That is correct. We've built the largest known deployment of immersion cooling for Riot at Rockdale. We have 200 megawatts of immersion cooling there. So this would double that in just the first phase, and then be, as far as we're aware, definitely beyond the largest deployment of immersion cooling out there in Corsicana.
Are you guys getting any data back yet on the immersion cooling piece of what you do? Just as far as, like, there were several potential benefits, one of which I think was to, just from a maintenance standpoint, the machines were going to take less of a beating, for lack of a better word, as well as the potential for higher levels of production. Is that playing out, or is it too soon to tell or talk about that?
So first and foremost, for us, the advantage with immersion cooling is, like you noted, the operational benefits and increasing the lifespan of that equipment. By operating at cooler, stable temperatures, that machine has less wear on it, which reduces the amount of maintenance that's required and helps ensure that equipment lasts as long as possible. As Bitcoin miners, the biggest expense we have is buying hash rate. Second is, infrastructure and then stuff beyond that. But the biggest expense that we all invest in is buying hash rate. So that's such an important investment, and we want that to last as long as possible. That's why we believe that focus and the additional expense of building immersion cooling is really important to maximize the useful life of those machines. The other benefit is those cooler temperatures can enable overclocking, and even those cooler temperatures also enable greater efficiency if you're able to underclock and get when you're operating even cooler temperatures as well. I think Brains did a study about a year ago now where they looked at the efficiency of the S19j Pro over different temperatures, and it was getting better efficiency than it was marketed as, just by operating in those cooler temperatures without doing anything else. So that immersion cooling is a part of just achieving improved efficiency as well. There is the benefit, there is the potential to overclock miners and get higher production out of them as well. That is challenging to do at scale. You're really increasing the heat load when you do that. And when you have a lot of miners doing that, it becomes more of a challenge. We've certainly done that and seen that on a smaller scale, and have had miners overclocked and see that in smaller scale environments. But doing that at a larger scale is more of a challenge. I'll say we've learned a lot through our first immersion deployment at Rockdale, and we are taking those lessons and applying those to an improved design, approved deployment out in Corsicana. So there is, the potential to see some benefits from overclocking as well. But, I think we're staying pretty cautious. We're going to see how things play out and see what we're able to do there. We operate in a really hot environment. In Texas, we have the advantage of these energy markets. What Riot's able to do with its power strategy helps drive our industry-leading, or one of the industry-leading, low-cost direct cost per Bitcoin. So that we think is really important. We just have the additional challenge of staying cool in those environments, which immersion cooling helps us out. And in fact, actually ties in with our power strategy as well. Many people may not realize. One of the things that we do as part of our power strategy is participate in what's known as ancillary services and demand response programs, where we put up our load to ERCOT for them to control it. So we're basically, ERCOT's paying us a fee to have the right to turn that on and off when they need or when they want. but you have to stay running. You can't say, hey, oh, it's hot today, so we've had to curtail during these amount of hours. You have to stay running. Little counterintuitive, because a lot of people think that they just want to reduce power, but that's not the case. They're trying to balance the frequency of the grid, which means having power on at different locations as well. So it actually, immersion cooling ties into our power strategy as well by ensuring that we can keep miners load that is bid into ancillary services operating during even the peak heat times as well.
So a couple of questions off of what you just said. Thanks. That was a lot of good information. At Corsicana, are you going to have similar relationships with ERCOT, and is that going to be able to participate in these programs in a similar fashion, or is that its own separate situation?
Yeah, so ERCOT is deregulated market. We would look to expand the power strategy that we've deployed at Rockdale, in Corsicana as well. It's a matter of just meeting the qualifications and the different steps you have to take. A key part of participating in these ancillary services is having a power hedge, which is known as a fixed cost of power, a block of power over long term. At Rockdale, we have that for 345 megawatts running through the different blocks run between 2027 and 2030, mostly through 2030. So pretty long term on those fixed power contracts. So as we get into Corsicana here, we would look to start adding blocks as well. We have no definitive plans to do that right now. That's another thing where we're looking at the market. Power's traded in ERCOT, the value of those agreements, and the price of those agreements is changing all the time. So we'll enter that when we think the time is right, and continue the success we've had with our power strategy out in Rockdale.
Okay, that leads me to the third segment of your operations, if you will, which we talked about. Obviously, Bitcoin mining is the main thing that you guys do. You have the engineering that I think we talked about supplements that. The third piece is hosting. So I just want to touch on that. We talked a little bit about that last time. Also, you guys addressed a bunch of this in your investor presentation, the latest and greatest presentation. But I was just hoping to get from, your thoughts. Is that a piece of the puzzle going forward? Do you consider that staying diversified? It's been, obviously, out of the three, it's been the weakest part from a financial performance standpoint. And again, I'll let you talk about some of the things. I think you've been taking steps to mitigate that and change that. Are you looking to continue to do that and turn that into a profit center? If so, is there a time frame on that? Or is that, are those megawatts better used maybe to ultimately convert to self-mining?
So the data center hosting business we have is driven by contracts, legacy contracts that were entered into by Whinstone before Riot acquired them in 2021. As you noted, we're taking steps to address that right now. We terminated recently one of the agreements with one of the customers, and we've initiated litigation against another customers for a set number of damages, 26 million in damages. Right now, we're in the process, of addressing this segment. I think we are always open to new hosting agreements. I think that's something that the industry is still struggling to wrap its heads around and how to make it work right. At different times, people want fixed price agreements. At different times, people want profit share agreements. And when the market's down, everyone wants a profit share. When the market's up, everyone wants a fixed price agreement. But then the market turns around, that fixed price agreement isn't always working. So I think there's a lot to figure out, especially when you consider what we do with our power strategy, interlaying that with data center hosting. It's complicated. So I think the easiest answer to your question, Tom, is we are open to hosting contracts still, and we do have discussions about that to see if there's something that would work. But our core focus is Bitcoin mining and scaling our self-mining hash rate.
Okay, that makes sense. So the last piece of that puzzle, if I can bring up, is it building G? I think that's been offline.
Yeah,
and
most of building G, yeah.
Okay, and I did see an update on that as well. You guys addressed that. I don't know if it was in your July update or in your quarterly report that, you did get some of the parts required, and that is coming back online. Can you just give just a quick update to everybody, for those who haven't read every page of everything. So that
Sure. So to give everyone the background, who don't follow everything as closely as you and I, Tom, is on one of our immersion cooled buildings, Building G at our Rockdale facility, was damaged during this extreme winter freeze that came through at the end of December, around Christmas in December 2022. So we first looked to repair these dry coolers that have all these pipes that water flow through them, really tiny pipes. We looked at trying to repair these. It was not possible, so we had to buy replacements for them. These are a longer lead time item, so we entered into those purchase agreements to purchase the replacements. And starting this month, we have begun receiving those replacement dry coolers. So over the next several weeks, through October, we will be taking out the broken dry coolers and putting in the replacement ones. Once those are all deployed, they will be back to normal cooling operations, and that building will be back into normal operations. Very unfortunate setback that this happened. It was because of weather, but I think we learned how to prevent that problem in the future. Very expensive lesson, but a lesson learned nonetheless. And we're going to be able to mitigate that in the future.
Okay, so that's without getting into details that you may or may not be able to disclose. It sounds like you've got some mitigation going forward if that happens again. I do want to ask you. One of my members on my channel brought up, insurance against these types of things. Is that something that's viable in your industry? Loss of revenue insurance, that type of stuff. Because I do think this was a due to weather type of act of God type of thing. Is that a viable option, or is that just not too new of an industry for that?
We are looking into all of our insurance options right now. Nothing is conclusive. I think there's insurance for replacing the damaged equipment, and then what you're referring to is business interruption service. That's that's a bit more challenging for Bitcoin mining. That's something that obviously would be great if it got paid out as well. But we're exploring all of our insurance options right now to get the most reimbursement coverage for what happened.
Okay. So I'm just going to sum up for a minute, and then I want to throw it to you, because we talked about an awful lot, and you guys have maybe more than anybody else going on just from a news standpoint. And I will say the last time we talked, we had mentioned, there was a long time in between press releases. And, I think a lot of that was a crypto winter. It sounds like you've discussed with us a lot of the stuff that was going on in the background. And now, sure enough, since the last time we've talked, you guys have put out some massive plans. So to me, if I were to summarize, I think you're at 10.7. You're getting that Building G back online. That's going to get you back to the 12.5 you were talking about. The 7.6 is going to get you over 20. And then you're going to play it by ear and see, you have optionality potentially up to 35 exahash, in 2025 or beyond, based on how things go. So that's my quick summary, but I've asked you a lot of questions. I want to throw it over to you. Did I miss anything? What else is going on?
That is a good summary. We're always been focused on scaling, and we're really focused on scaling when the market's the worst too. Historically, that has been the best time to grow, because that's when people are the most fearful. That's when equipment is priced the cheapest. I think one of the major investments that Riot made that helped propel us to where we are today was growing our hash rate in 2020 in the midst of COVID chaos and the market seeming horrible. We were raising capital and investing in growing our hash rate. That helped us get us into the position that we are in today. And we believe by continuing to make that investment during a downturn in the market, I'll step back. A year ago, Bitcoin's under 20,000, 16,000. And people are asking me, why are you guys building Corsicana? Just stand still, just don't do anything, just sit on the cash. Okay, that's one way to approach it, but it comes back to the long-term Bitcoin vision for us, and taking advantage of opportunities when they present themselves, leveraging that balance sheet strength, and continuing to always grow. We're not always trying to take a view of the market at that time and being like, we're buying the bottom here, we're selling the top here. No one is omniscient enough to do that. We are maybe pushing the chips in a bit heavier at certain times, but we're generally averaging in, always trying to grow our hash rate. And the compelling reason for doing that is our low cost of production. By having a low direct cost per Bitcoin, we are increasing our leverage on Bitcoin's upside. Our cost of Bitcoin, is low. Whatever Bitcoin goes to from there, we're appreciating the upside in between that, because historically, traditionally, it takes longer for the network difficulty for competition to catch up when the price of Bitcoin goes up. So having operations in place, having a low cost of production really helps improve your leverage position on Bitcoin as it rebounds and better markets come in the future. Our power strategy is a key part of that. I know we talked about that, but we're really proud that during Q2, we had a direct cost per Bitcoin of just under 8,400 Bitcoin. And I think that's a metric that's going to become more of a focus for investors as it become more critically looked at as we approach this halving, and that cost of production becomes more critical as margins compress, at least until the price of Bitcoin rebounds, hopefully after that. But, we have immediate margin compression when that halving occurs. So our power strategy is a key part of accomplishing that. We have a fixed block of power that we can use to mine Bitcoin, or we can curtail and effectively sell that power back to the grid when prices are high. So we're playing kind of two different markets here. We're looking at Bitcoin mining economics, we're looking at power economics. And sometimes the economics for selling power are better than mining Bitcoin. And then we curtail our mining operations and make that power available. And what we get is a credit offsetting the next power bill that we receive. So that's what helps drive that low cost of production of 8,400 per Bitcoin in Q2. You see our monthly update for July. We had another strong month of power credits. And if you look at how the market is playing out in ERCOT over these summer months when power is in high demand, you can expect, I think, around similar performance to continue here through August. So it's an exciting time to be a Bitcoin miner. And we're really excited to continue demonstrating our efficient operations and scaling out those operations to the widest footprint we possibly can.
All right. Well, I think that sums it up on my end. Thank you for, I kind of went through everything I could think of, so I appreciate your candor and answering all the questions. I congratulate you guys on it's been an incredible run. These are a lot of big announcements. I do think the energy strategy that you guys have, I look at as a highly effective hedge to keep you guys growing. Thanks for everything. Thanks for coming on the channel. This is the second time you've come on, so I appreciate you returning, and hopefully, the next time, we get a big announcement or whatever the case may be, we can come and talk about it and chat about it again.
Yeah, thank you for having me on, Tom. Appreciate the opportunity to talk about Riot. And yeah, we'll get back out there either next time we have an announcement or we're farther along in the Corsicana development. Maybe we'll get you out at the Corsicana site. You can see it in person.
That would be exciting. Well,
Yeah.
I appreciate you spending your time with us.
All right. Thanks, Tom.
Okay, thanks so much.